let's have a look at the history of Bitcoin crashes. How many times has Bitcoin crashed and people have called it dead? So let's walk through every major collapse because the pattern explains why it's still here. So 2011 was the first real meltdown. A Mt Gox account got compromised, thousands of BTC were market dumped in minutes, and the price went from $32 right down to almost zero. So Bitcoin did not fail. So one poorly secured exchange failed. And back then, crypto was really the wild, wild west. No rule book, no proper custody, no safety net. And that was because Mt. Gox was basically the whole market. Everything went with it. So then 2013 arrived. In April, Mt. Gox could not cope with the new volume of withdrawals. So traders freaked. Bitcoin had just made $266 and then crashed back to about $50. So in a day. And that was the first time people realized exchange outages could equal instant market panic. So later in 2013, Bitcoin reached just over $1,100 for the first time ever. So then the People's Bank of China announced that banks and payment processors would not work with Bitcoin. So liquidity suddenly looked fragile and fear took over. Price dropped from around 1,100 to around 400 and the long bear market started. But by 2014, the truth about Mt. Gox could not be hidden any longer. So hundreds and thousands of BTC were missing. The exchange collapsed completely. So that event taught a whole generation of traders, me included, the hard rule: do not keep all your coins on one exchange ever. And the mid-era was not gentle either. So it was still the Wild West, just with more money on the table. So in 2016, the Bitfinex hack wiped out a large chunk of liquidity and took the entire market with it. So then in 2018, QuadrigaCX went down and the founder, who controlled almost all of the keys, died or disappeared. And there were plenty of rumors that he had a facelift, identity change, or something like that. But regardless, all of the funds were gone. So that was not a software bug. That was a single point of catastrophic failure. And in 2018, BitConnect exploded. Was a BitConnect, a global lending Ponzi that vaporized billions and became the mascot of the 2018 bear market. Then 2020 delivered the fastest crash in Bitcoin history. So when COVID hit, everything was sold: stocks, gold, oil, crypto. At one point, all oil futures even went sub-zero. So Bitcoin plunged from around $9,000 to $3,800 in 2 days. Then BitMEX liquidation locked and it turned the crash into a waterfall. So this was the moment that their insurance system failed and it cleared all positions. Over-leveraged traders were wiped out one after another in a cascade of events. So, and for the record, that is not what put Arthur Hayes in court. His case was about US law and KYC, not that crash. And bring on 2022. So that was the demolition year. Luna was the first big crack, an algorithmic stablecoin backed by design that could survive real market stress. So Do Kwon thought that the TWAP mechanism could hold the peg. I told him otherwise in some tweets, so I even wrote an article too big to fail, warning about these structures would blow the market, and the market turned. So once Luna snapped, everything built on leverage and fantasy economics started to fail, and everything it touched failed. Celsius froze withdrawals that trapped user funds, Voyager went bankrupt, Three Arrows Capital withdrawals imploded under its own leverage. So BlockFi went down after being smashed from every direction. So none of that was Bitcoin failing. It was a stack of companies running billions and billions like a school group project, not actually knowing what they were doing. And behind the scenes, we had FTX. So they might have patched a massive hole by bailing out Alameda in Q2, but it didn't fix anything. It just buried the rot deeper. And here is the important part. I was not watching from the sidelines. On the 7th of November 2022, before anything happened, I publicly removed FTX from our recommended exchanges at Getting Started in Crypto because I did not support what Carolyn and SBF were doing to the industry. The cracks were already visible, and actually, if you were paying attention, you could see what was happening. And days after that announcement, FTX detonated. So the truth came out, trust evaporated, and Bitcoin dragged all the way down to 15,000. So that flushed out the system that locked in the cycle bottom. So now SBF is serving 25 years in prison, and Carolyn Ellison has been sentenced to 2 years for her role. The Wild West did not just get a warning, it got jail terms. So if we look at the pattern across all of this, every major crash had the same root cause. Bitcoin didn't break. The human systems around it broke. Bad security, bad leverage, too much leverage, founders who got God-level control, greed, and denial. That is what broke the market, not Bitcoin. It started in the pure Wild West, where there was basically no rules at all. Now the sheriff has finally walked into town. Regulation, compliance, banking rules, ETFs, and listed products are wiring Bitcoin into the traditional system. That changes the cycles. Less random chaos, more risk tied to big institutions and policy. So here we are at the beginning of 2026. New cycle, new money, same human behavior underneath it all. So the next big crash hits from here, probably mid-year. It will not be about Bitcoin breaking. It will be something built around it. So the weak points to watch are simple. A major exchange growing too fast and taking on risk it cannot actually cover. ETF giants hiding too much supply and becoming a single point of failure. And that is regulation and traditional finance shaping the cycle, not stopping it. The next big crash could be a big corporate treasury that is forced to sell, triggering a wave of panic selling, or AI trading algorithms all herding into the same direction and turning a dip into a stampede. A sudden geopolitical move that cuts off banking or liquidity overnight, like we're seeing with something happening with Greenland or Venezuela or oil. So there's lots of stuff that could go into the next crash. The biggest risk in the market is not Bitcoin itself. It is the humans and everyone forgetting what broke it the last 10 times, just in a slightly more regulated way. So Bitcoin is not dead. The market just reacts to human error.